And welcome back, fellow American patriots and Minutemen, standing at the ready to fight anew for the truth, for the issues that matter. And on this fine Wednesday, the issue that matters is housing, the economy. How are we ever going to afford life again with this venture socialist economy? We need to get government ownership out of housing, even more so than we need to get corporate ownership, although it would be great to get both out. So we're going to focus on housing today with our special guest, Melody Wright, as well as other economic issues. There's also so much more going on, foreign policy, immigration. We're going to try to mix it up, but things that I cannot get to, I'm going to have my Substack at Daniel Horowitz on Substack. You could use the QR code here as well. Make sure to subscribe and like our YouTube channel at Horowitz Show. So, folks, it reminds me of the old Pringles commercials in the 90s. Once you pop, you can't stop. Rather than allowing the housing bubbles to pop, the government cannot stop endlessly fueling the housing bubbles with MBS purchases, with affordable home programs. We talked about that yesterday. We'll delve into that more. Here's the good news about housing, and we will have some good news. There are signs that prices are coming down, but not if government continues its fiscal and monetary subsidies, this zero interest rate gambit that creates cheap, fake growth in the economy, more debt. Unlike other vexing problems, healthcare, welfare, general spending and inflation, even the demographic problems and national security issues, we need major policy changes that clearly both parties lack the ability, awareness, or desire to pursue. Certainly, free market healthcare, cutting spending. So I don't know what you do. I mean, we're going to advocate every day for the right issues on every one of them, right policies. They have no interest in ending inflation. But the good news about housing is that you don't even have to do anything complicated because it's a bubble and it's already starting to drop. If you merely do nothing and just let it pop, it will come down. Now, obviously, you could do a lot of things. You could stop manipulating interest rates. You could stop getting the Federal Reserve and Fannie and Freddie and Ginnie and FHA to do all their nonsense. And then you'll decelerate prices even quicker. But you know what? Even if you don't do that, unlike with healthcare, the status quo will eventually get pricing down. My concern is that everything the president is doing is going to not allow the bubble to pop, and instead he wants to prop it up. That's the first observation. I think you see it in his economic speech that he gave yesterday. I want to get to some of his clips there. One other ground rule here with housing, and then we'll get to other stuff and then get back to housing. I have no problem regulating corporate overreach. And I think this is a discussion we need to have, not just on housing, but a lot of things. What do you do when you have a generation of governmental policies that create artificial private sector monopolies and those companies engage in anti-consumer behavior? So I have no problem treating those symptoms and regulating certain behaviors that are undesirable from corporations, provided that we have the limiting principle of broadly unwinding the governmental policies that caused that gave those corporations that latitude, that market share to do that. But to regulate corporate overreach that was caused and encouraged by government in the first place, but then turning around and exacerbating the very governmental factors that caused and created that corporate monopoly, Well, that's ass backwards. It makes no sense to do that. And my concern is that's what we're doing on housing by regulating corporate ownership, but then exacerbating governmental ownership, fueling price inflation, which is exactly what led to this institutional buying of residential homes in the first place. So that's what I don't want to see. And folks, I think this is a principle we need to use for a lot of this, populist rhetoric and populist ideas of, oh, companies shouldn't be allowed to do this or that. There are times where we're sort of stuck that you have to reverse engineer things that we wouldn't do in a free market, but we don't have a free market, and a lack of a free market caused it. So that's the ground rule with housing. We'll get back to that. I want to get to Trump's speech. He spoke, I gotta say, Trump's message is the exact opposite of the one we promote here. It's let's continue propping up the stock market bubble. Let's continue with the near zero interest rates, the venture socialism, rather than returning to an income-based economy. Take a listen to what the president had to say about the stock market and zero interest rates.
In the Fed, we have a real stiff in the Fed, but that's for another day. But they raise rates. So everyone says, oh, they announced great numbers. It's great, great, great. And the market goes down because they immediately raise rates. No, when the market goes up, they should lower rates. You want to see 20% and 25%? You want to see what we can do? We've got to go back to an old standard. When there's good news, the market should go up, not go down. Does that make sense to everybody? And that's the way it used to be for most of the time. That's the way you make a country great. But our growth potential is unlimited and could be much higher if we went back to sanity. We're not doing it anymore. We're talking about the head of the Fed, and I want somebody that when the market is doing great, interest rates can go down because our country becomes stronger. See, you view it differently. Our country becomes stronger, and therefore interest rates.
All right, so folks, I don't even know what he's talking about because he's right for the exact opposite reason. Yeah, the market doesn't track with the economy. He's like, yeah, when things are good, I want the market to go up. Well, the market's going up even when things are bad, precisely because this. Also, this is sort of a delayed reaction. He's like, oh, every time the market goes up, they raise rates. They lowered rates 175 basis points over the last 15, 16 months. And the economy is worse than ever. The stagflation is worse than ever. The PPI numbers were out today. They're terrible. I don't know what he's talking about. And everything is still expensive. And the treasuries are rebelling against the interest rate cuts. But moreover, you see that he views everything with the stock market. And he's like, I want the market to go up more. And I want zero interest rates. Near zero interest rates. Near zero interest rates create endless debt and fake wealth for those companies that already won the last round of governmental venture socialist tendentious favorable treatment. That's the reality. Okay? So I don't want to hear about this, oh, near zero interest rates is what helps. This is exactly what creates this K-shaped economy. Again, I'm not against the stock market, but the stock market can't be doing 25% every year. That's not natural. And if it is, it's because of unnatural policies. You want to know why we have all this inflation, fake economy, fake wealth creation, monopolies, buying everything like the AI stuff on margin that's unsustainable. You want to know why we have the housing bubble. It's the near zero interest rates. He wants to return to that. And basically, right now, it's still very high, but the prices are coming down. He wants to reverse that. He wants to reverse that. Oh, yeah, have 2% mortgages. Yeah, you want to know what housing prices will look like? Give me a break. We can't be doing that. He wants a housing bubble as much as he says he doesn't. And he wants a stock market bubble, and that he says he does. He actually went on to say that boosting 401ks is very important to me. Now, again, I want everyone to succeed, but it's not normal for people in their 40s, 50s, and certainly 60s, 70s waking up every day and finding out, seeing, oh, my portfolio jumped another 15,000 overnight. That's not normal. That is why we have this fake K-shaped economy where 80% are crushed, but 20% are beating inflation with the stock market. That's coming at the expense of everyone else. We're misallocating capital into a fake economy. 401ks and housing value has a certain baseline value it should have, but not this crazy bubble level. The solution to lowering prices is to stop supporting all of the policies that create inflation, albeit they have this side positive effect of creating a ton of equity in housing and 401ks for the previous generation. You can't support younger workers, the economy at large, and crushing inflation if you want to support the very factors that are benefiting just hyper inflated 401ks and housing pricing. But for some reason, the president is into that. And I get it. You know, at the end of the day, seniors vote, and there's more of them. And look, it's not just seniors. I mean, even middle age, you have some. I have somewhat of a portfolio. I have a house that went up a lot, but I would rather go back to an income-based real wealth. On net, it's good for everyone. And by the way, the president could talk all about the 401ks going up, but you know what? At the end of the day, the best performing assets of his presidency are precious metals. Okay? Silver is up 200% over the last 12 months. Gold is up, what, 60, 70%. You have palladium, platinum, copper, all this stuff. It's laughing out of this economy. By the way, something that really exemplifies this K-shaped economy more than almost anything else, I saw a report out that Delta Air posted $5 billion in profit. So Delta Air is doing very well. Yet, at the same time, they sold 1.1 billion less in economy tickets in 2024. And I'm assuming that trend persisted last year based on the data we have. So how is that? Well, the answer is because the premium, the first class, business class ticket sales more than made up the difference. There, my friends, is your K-shaped economy right there. So all of the spending is coming from that top 15% that are in industries that's beating inflation. They have asset-based wealth or income-based wealth built upon the asset bubble economy, but most people don't. I thought we didn't want to continue that. And look, unlike Bernie Sanders, I'm not telling you the government needs to redistribute wealth. I'm telling you that the government distributed this inequality to begin with. I'm saying let the market work. But again, for the president, for all of his rhetoric, oh, I care about the people, you look carefully, his policies are all geared towards the elites. Oh, and by the way here, I don't know if you saw, the president's going to interview BlackRock CIO Rick Ryder for the possible job of Federal Reserve Chair. Now, why in the world would you go to BlackRock to run the Federal Reserve? I mean, isn't that sort of bringing the fox into the henhouse? But again, as much as he has this pseudo-populist rhetoric, the president does enjoy the asset bubbles. And this is his obsession with loose credit, loose money, deficit spending. This is why our economy is the way it is. But you know what? Nothing in life is absolute. There are ancillary benefits to a bubble economy, and there are certain people who benefit from it. And by and large, those are the people that both parties are servicing. I don't believe we need to service anyone. You service the whole of the people with a free market, no favorable treatment. That's what we need to go back to. But my fear is the president is not doing that. And I don't know what we do. I don't know how we get him to change. And this leads me to just another point that I think is important to point out. Everything the president is doing, whether I agree with it or disagree, some good policies on immigration, some bad policies economically, everything he does is executive. He's not trying to garner support from Congress to pass a budget reconciliation bill. Instead, he just does it executively, and all this stuff is going to get mowed down in the court. So whether you like it or not, capping credit card rates, printing more money to buy MBSs, barring corporations from buying residential houses, all that stuff is going to get mowed down. Let me give you an example. Trump announced in the same speech that there will be no payments to federal grants to any sanctuary city beginning next month. Great announcement. But he did an executive order last year saying the same thing, and the courts mowed it down. So if you don't codify it in Congress, it's a joke. Yet, the administration is supporting a House-passed bill that continues funding it, funds the Justice Department without a rider to defund sanctuary cities. So it makes me believe none of this is serious. It's all just press release driven to let the country know, oh, I want to do something about sanctuary cities. I want to do something about housing. I want to do something about inflation. But you're not driving a narrative behind a set of coherent policies and demanding that Congress support it and making that a precondition for endorsements. Instead, Trump's endorsing a lot of these incumbent rhinos who don't support these policies, whether you and I agree. Like, let me give you another example. House Republicans just filed a budget reconciliation bill. I don't know if leadership supports it, but a handful of members. What does it do? Does it completely put an immigration moratorium on? Does it wholesale reform welfare, which you'll never get better tailwinds with all the fraud like we've been talking about to do? Again, you're going to get crushed in the election no matter what. You may as well go out with a ball of fire and do stuff that's actually transformative and maybe actually excite your base to at least mitigate some of the losses. Whereas now you'll get the worst of all. You're turning off the middle, but then your base is depressed, so you get nothing. So what's this reconciliation bill? It's about illegal aliens can't get welfare. Well, I thought we already did that. But B, again, welfare is much bigger than just illegals. If you wanted to address illegals, address that in an immigration reconciliation bill, defunding all judicial challenges, defunding all challenges to states, allowing states to deport, full immigration moratorium, ending foreign workers. Don't chip around the edges. If you want to talk about welfare, let's block grant all welfare back to the states and stop making pretend like it's only an illegal immigration problem. It's a side problem. It's not the whole problem. But instead, we're just left with a bunch of executive actions and small-minded thinking. Another example, and this is actually something that Trump can do executively because it's a personnel choice. Trump took a photo shoot with U.S. attorneys and he was caught mocking them, like for being weak. And he's right. Frankly, a lot of the federal prosecutors are Biden holdovers. They're leftists. They're continuing the weaponization. And they're not prosecuting the people they should. But the last time I checked, the president could fire them. Now, I get it that in order to get a permanent replacement, you need Senate approval. And I get this blue slip rule is holding it up. But two things on that. Number one, the president could appoint interim U.S. attorneys and keep just cycling them through. So at least you don't have the bad guys there. Again, this is not the chaos of the first 30 days. It takes a long, this is 12 months into the administration, and we still have leftists in so many districts as U.S. attorneys. This cannot continue. But moreover, why is it that we have weak people like Chuck Grassley running the Judiciary Committee and abiding by this blue slip rule? It's because Trump endorsed him against a friend of mine that I endorsed years ago. That's the problem. It all gets back to him. You can't be king of the Republican Party for 11 years, president for a good chunk of that, and then somehow pass the buck down. Trump has had a longer, more domineering tenure as the head of the Republican Party than anyone in history. More than Reagan, more than Lincoln. So I don't want to hear about, oh, it's someone else's fault. It's almost like he has ADHD and just comes up with a press release or a social media post. Oh, I don't like this. But no, you got to have a plan, have someone introduce it in Congress as a budget reconciliation bill, and drive it, campaign for it every day. But that presupposes that you have the right ideas. There's one other story I want to get to before we have our special guest on, and that's foreign policy. There's a story out in Jewish Insider, but it's been reported everywhere that this issue was broached in the meeting between Netanyahu and Trump, that Netanyahu is actually pushing to phase out aid to Israel over the coming years. And because he recognizes it's an abusive relationship, it does nobody good. It creates dependency. And then we tell Israel where they could build homes, how they could defend themselves. It just let's wean off of it. So it turns out that Trump opposes it. And my friends, this blows up this entire lie that somehow Israel, through its aid, is running our government. Like I told you, the aid is used to crush Israel and make them dependent. In the 1980s, they wanted to build their own fighter jets. The U.S. defense contractors went nuts. So they've been stymied from spreading their own wings. Everyone agrees this is what needs to happen. Why would Trump oppose it? Two reasons. Number one, the defense contractors want it. So there's a little bit of cronyism there, donors. Number two, he wants that control over them and telling them what they can and cannot do. And I think this is stupid. So both if you're a pro-Israel, guy that wants to see them succeed in defeating their Islamic enemies, or if you're just like more of a, hands off, I just want to stay out of it. Either way, we should support this policy. The prime minister himself is supporting that policy. Let them be independent. And of course, we shouldn't be funding Israel's enemies, but that's a whole nother story altogether. But let's get back to housing. So with regard to housing, there's really three courses of action we could take. We could actually deflate the bubble actively by reversing all of the policies that caused it. Okay, all of the HUD, FHA, Federal Reserve policies that put unnatural pressure on buying, create an unnatural pull towards more debt, lower interest rates. Or we could just do nothing, which, like I said, with housing, unlike healthcare and other inflationary concerns, it will go down on its own because there's a lot of good information on how prices are starting to come down, because at the end of the day, people cannot afford the current prices, and there's a record number of sellers. And at some point, most of them are going to have to sell their house and get it through their thick heads that equity you thought you had was a bubble and you don't have it. It will crash. Or we could do the third door, go through that third door, which is the worst of all, which is to do what we've been doing all along. Rather than letting the markets heal, we go and prop it up more, all the while saying that we don't want prices high, but let's subsidize more construction, more low income loan guarantees and programs, more government ownership. And then we could distract with certain symptoms of the problem and exacerbate the actual causes. So with us today is someone who is one of the sharpest thinkers on this issue, someone who's been in the housing industry for a long time, no stranger to this program, Melody Wright. She's a mortgage finance and housing policy expert. She has a must subscribe M3 Melody Substack and at M3 _ Melody on Twitter, and is here in the flesh with us today at the Blaze. Hey, Melody, welcome back. Happy New Year.
Thank you for having me. It's my pleasure. Happy New Year.
You're like the housing nerd, and often it's off the algorithmic focus. But this week it's been kind of the Super Bowl. So Trump is out with a bunch of policies that I believe are either treating the symptoms or downright exacerbating what has fueled the bubble. So he wants to stop corporate buying. He wants to buy more MBS pumping, Freddie and Fannie to purchase 200 million MBSs. He wants more subsidies for construction and affordable housing through this S-2651 bill he's supporting. And then he wants to lower the federal funds rate at all costs, saying, look, let's just get down the mortgage rate, and that will create affordability. And now they're talking about somehow expanding the rules for tapping your 401k retirement without penalties to help buy a home more than you're currently able to do, which we're still trying to figure that out. So let's go through each one, but in totality, what's your general take on the president's newfound focus on housing?
Yeah. So, Daniel, I think it's a lot of throwing the spaghetti at the wall. And as you say, it's treating symptoms. But, if you think about it, they have to walk a very fine line between the boomers who have been living off that zest effect for some time, believing, and I call it the zest effect because, the Zestimate that they've been watching for years go up and up is, it's now starting to come down. Whereas you have the young Americans, you look at what happened with Mondami in New York, who can't afford housing. They can't afford to rent. They can't afford to buy. And so it's a fine line to walk, and you can't have it both ways. And so I see a lot of this as spaghetti that, maybe even inside the White House, they don't believe these things are going to work, but they have to do something. So we can take them if you'd like, one by one. Okay, so, the first announcement we got was the ban on institutional buying, which is about, I would say, 14 years too late. If we had not had Fannie and Freddie participating at scale in the last housing crash, then we wouldn't have had to invite the institutionals. They got invited because we had a prime foreclosure wave. And so many people look at the last housing cycle and see that it was subprime. That was just one issue. And so they had to stop that foreclosure tsunami. So they invited Wall Street in to come and bid those homes at auction. And that ultimately kept home prices from going even lower, Daniel. And they would have gotten lower to where, once again, if you go back before the 70s, you can see that household median income tracks the median home price. But that has changed significantly since the late 80s because even in the CPI, they define housing as investment versus speculation. So what is this going to do for housing really? Well, they're less than 2% of the market. Your mom and pops are way bigger in terms of investor participation. And so this is, in my opinion, and I'm probably out there a little bit saying this, is that this is actually phase one of a bailout for the institutionals. Schwartzman was a big mega donor. And so what you're going to see, in my opinion, is first is the ban. We've already seen institutional investors crying on podcasts saying, we just bought these homes because the government needed us to.
Yep.
And so what will happen, in cities like Atlanta, Charlotte, Tampa, San Antonio, where they do have a very large presence. And so I don't want people to mistake that.
Yeah.
I think it's not a big deal. They can't find a floor. And I was in the room with one of these large institutionals in September who told me as soon as leases are up, because these were all long-term rental, they're rehabbing and they're selling as quickly as possible, but they haven't been able to find a floor. So think about this way, Daniel. It's packaged in a bailout for Main Street or doing something kind.
It sounds like you're going after the corporations. You better not buy.
Yeah.
But your point is, yeah, well, that was needed 14 years ago. But then again, the government invited them in because the government created the problem. We have a government ownership problem more than a corporate ownership problem, which again, I don't like. None of us like the corporate ownership, but we have to understand it's a symptom. But not only is it a symptom, not the cause, it's also a delayed reaction. You're saying right now they see the writing on the wall. They have them at bubble prices. Prices are starting to come down a little bit more in the South than the North, but
where they have a large presence, right?
Where they have a large presence, and that's a good point. And there's only one direction for it to go now, given that we have a record number of sellers versus buyers, because it's just held back for 3 or so years so far. So now we have a problem where they need to offload it. So they sure as heck aren't buying more. They're having trouble selling them, and the prices are going to have to come down. And I want you to explain, because people really don't understand this. Oh, of course, everyone wants prices to come down, right? I mean, this is terrible. We've never had such a bubble like this. But then when we start doing it, what happens? When prices start coming down, what does government do?
They continue to get involved and they keep trying, something to keep it from happening, because again, we know that the boomers own the majority of the homes. That wealth effect, zest effect has really driven a lot of consumption. We also know that the top 10% accounts for 50% of spending. And a lot of that spending for, not the 1%, but the other 9 has been based on what they think their homes are worth. And so, this is a big deal. If you have something like that happen, suddenly the consumer is in a much worse situation. But, just to kind of in the thought on the bailout, that bill that you mentioned that's in committee, there's another one in committee. I think that could be tweaked very easily. We may not even know that this is happening, because they could do it behind the scenes, where they offer through either a nonprofit or directly to buy those homes at a certain price floor that's less than what they are right now, which would have happened naturally anyway, and then offer them at some sort of like, oh, if you make 75% of the median income in your area, you are eligible for down payment assistance and blah, 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 blah.
Wait. That's important, because this is something that I can't wrap my brain around. So on the one hand, they're saying they don't like corporate ownership of residential homes. But within that small pie, and it is currently a small pie in most parts of the country, the lion's share of that build to rent. Is that being touched by it? Because what I see in this bill that the White House is supporting, with the support of Tim Scott and Elizabeth Warren, bipartisan, seems to be incentivizing and more loan guarantees for a lot more low-income build to rent. So do we want the corporate ownership or not? I don't get what's going on there.
It's performance, in my opinion, Daniel. And so those rental programs will help the institutionals that do have that build to rent. And so, that's American Homes for what they have been doing. So to be clear, they have not been buying since 2022. What they've been doing is trading cards with one another. And so like you'll have just so they can keep those prices at a certain level, because those assets are pledged to a lending facility. And so, you can't have mark to market because you won't be able to borrow as much. So, yeah, I think that's a great, you're pointing out the hypocrisy, Daniel, of all of this. And honestly, I believe that there will be a phase 2 where the builders get bailed out. I mean, I think the builders are getting bailed out too. I think the institutionals and builders will both be sucking at the edge of those bills that are in committee, and trying to stave off further losses, because they're both in a significant amount of trouble.
Okay, so let's move on here. Number 2, Freddie and Fannie. And again, all this stuff needs Congress, and it will get struck down the courts and whatever. But let's say this happens. Freddie and Fannie, although they have been buying on their own MBSs. So I thought we all agreed that part of why housing is overinflated is because of government ownership that at
Mhm.
its peak, Freddie and Fannie before the GFC, I'm sorry, the Federal Reserve before the GFC owned 0% of mortgages. Then suddenly they owned 2.7 trillion. And
Mhm.
they unwound a little bit of it, but it's still 2.1 trillion as of now. So
Right.
I thought the announcement would be we're gonna now this gets into the independence of the Fed business and who has control, but we're gonna try to get a Federal Reserve chairman. He's interviewing a BlackRock guy, but a Federal Reserve chairman who is gonna unwind that. Instead, we're like, not only is the Federal Reserve gonna do that, but we're gonna get Freddie and Fannie in on the action with 200 billion more MBSs. What effect will that have on the market?
Well, so like you say, it's been happening since May. Okay. And and the reason why buying the MBS makes those mortgage rates go down is because mortgage rates track the 10-year treasury. And when you buy that MBS, it tightens the spread because, you remember Basent wanted to get that 10-year. They want to get it way below 4. They've had zero luck getting it below 4. So this is a trigger that they're pulling. But the problem is we've had lower sales than we did last year, Daniel. This year, we just got December numbers today, slightly lower, which that was the lowest since 1995. This is on the existing homes. And so although rates have come down since May from this MBS buying, it hasn't really had a huge impact on sales. Now, 200 billion. Okay. So let's put this into perspective. When the Fed started buying in 2009, because they did, it didn't do a gosh darn thing. It might have reduced the speed at which prices decelerated, but in reality, it did not stop the crisis. So I want people to have that perspective. Additionally, when the Fed was buying in January 21 all the way through March of 22, when they started raising rates, they bought 700 billion and rates went up. So the bond market dictates here. And,
Yep.
so this is another performance that's happening. And, maybe they'll raise the cap, but that 200 billion is not going to do what they think it's going to do. And maybe they do know this. But we just got rates as low as we got them last year before the Fed rate cuts.
And also,
Just
isn't
now.
it true? We could debate, 7% where it was, maybe it's a little high, but where it's down stands now around 6, and maybe you'll get into the upper fives. Isn't that already the historical average that you would want it? Because if we have what Trump wants, which is let's say 2.5% mortgages, well, isn't that going to make houses worth like $1 billion? And isn't that how he got here? I
It
mean,
is it is
what
definitely how we got here.
what
Mhm,
he's treating the symptom again. The
mhm.
symptom is that housing got too high and there's too much inflation. So then the rates had to come up and then they came up and then now you're stuck with both. And then you have this generational trap that people don't want to, but how did we get into this? Because we had it's not normal to service 30-year debt. And especially you add in the FHA there where you don't put down 20, you put down
3.5.
3.5. Well,
Mhm.
oh, and then for like no interest. Well, yeah, I mean, of course, then how's they're going to be worth $1 trillion? Wouldn't we rather find ways to get housing prices down?
Yeah, so you would if you weren't, dependent on those boomer votes, because so many of them don't want to see that happen. But I totally agree with you. This is the opposite of what you would do. However, I think because of where we are in the cycle, it's actually going to have a different effect than they think. As rates go down, we had a lot of rage delisters last year, which were people that took their house off the market because they couldn't get the price they want. And like you say, even with that, we have a ton more sellers than we do buyers. And so, what's going to happen when they see these lower mortgage rates and it's all in mainstream media, right? They're going to take that inventory back to the market, expecting that they're now going to be able to sell their home because affordability has improved, but it's not improved anywhere near where it needs to improve to really move the housing market. So I think that they think likely that this will sustain home prices. I believe it actually will facilitate and speed up that the home price declines.
So I want to get to the meat and potatoes here of these wrong-headed policies. So it's not understanding what caused the bubble, but it's also misdiagnosing the problem. So everyone's taking this sophomoric view. They have anecdotal evidence of certain markets, and they're like, "Oh, I'll tell you the problem. There's too many people who want a house, and there's not enough supply." This is taken as gospel. You look among these online politicos that don't know anything about economy and housing, and they have this premise that we have a systemic generational shortage of supply, and we need to incentivize with zoning, incentivize with subsidies, incentivize with innovative housing reforms of these, this S 2651 bill to build. But in fact, Melody, what is happening on the ground?
Well, so by published numbers, we have almost 9 months of new home supply. Okay, let's start there, and we'll go back to demographics in a second. And the builders can't sell those homes, so that's one indication that we're not. And by the way, they are lowering prices. What they've been doing since 2022 is these permanent rate buy downs. So effectively, Daniel, they have been lowering rates for some time, even below that 5% mark. And what's happened? Their sales are still not great. And they're having to come down on the top line price, which now is far below your existing home, like your used home median sale price. So so that should be anecdotal evidence.
The new construction is a lot. And actually, again, it's the resale with the interest rate trap. But in terms of new construction, it's there.
Correct.
And in fact, don't we have, in terms of, this renter nation, getting back to that it's a delayed reaction. It's already self-correcting.
Yeah.
Isn't that entire multifamily unit market cracking?
Yes.
With vacancies going up
Yes.
and rent is going down?
Yes. And vacancies are the worst since 2017. This is apartment list. And yes, rents are going down, and they will continue to go down, Daniel, because we still haven't delivered all that multifamily that was in the pipeline, the same way we haven't delivered all of those new homes, which, as you know, I've been on the road, I've driven all over this country. And what they're saying we have, I think that's probably 25% lower. But the biggest thing that nobody wants to understand is our demographics. And so when they say that generationally we don't have enough homes, they're not looking from a historical perspective. They're not looking at that our only population growth last year was actually from immigration. And they're not looking at the silver tsunami that is coming. Harvard has studied and said, 15.6 million boomers will leave us between 2025 and 2035, another 25 million, but from 2035 to 2050, they own the majority of the homes. There's also 15 million vacant homes out there. That's not counting the 3 million that are seasonal. And so and just drive down the road, you will see vacancy everywhere. So this is a complete myth. And then people will inevitably say, Daniel, well, the Northeast, you can't build there. There's no land. Well, everywhere I saw in the Northeast, they've built where there is land. But here's the problem. In the Northeast, in those cities, they have a very low owner occupancy, which means you have a landlord class. That landlord class is also the boomers. They're also seeing things like in Boston, double-digit property tax increases, and they can no longer cash flow. And so those will be coming to market, as well as you just have an older population in the Northeast. All of our migration trends have been to the South, where I don't care if all the Northeast moves to the South, we're still going to have plenty of housing. That's how bad they overbuilt. So this narrative, what it had to do with is that there was a lack of listings on the multiple listing sites. This is what they use to justify the narrative. The problem there is that you had a ton of investor speculation for those short-term rentals, Airbnbs. They were all buying them up, as well as there's this thing called private sales that weren't hitting the MLS. They were selling them on Facebook because this was such a crazy time. Oh, get your Airbnb in Sevierville, Tennessee, that kind of stuff. You can look at any of these cities, tons of this stuff. So I think that people who talk about the inventory shortage myth are looking at a very tiny percentage of the market and not really looking how many housing units do we have. This is something I think we've talked about where, the average per household is around 2.5. When I was a kid, it was like 4.2, then 3.5. And so in reality, we have plenty of housing. It may not be appropriately priced. And I'll be clear that we don't have a ton of affordable housing, primarily because of this investor class, these speculators, as well as these boomers who believe that it's not their fault. This is what mainstream media has told them, that their homes are worth way more than they really are.
Yeah, but again, at some point, the price, the tab comes due.
That's right.
And you've talked about that they're already overbuilt. So you have this phenomenon in Phoenix where 54% of rentals in the metro area are giving tenants at least 1 month free rent.
Right.
What does that mean?
Well, so they're doing the tricks that the builders did, right? They don't want to mess with that top line rental price. And so I what I've seen just looking at them in Phoenix is it's 3 months. It's, and also incentives, free cable for a year, that kind of thing. And so you're going to, that's where they start. And then that you start seeing those rental rates. And I'm hearing anecdotally from followers that they're negotiating with their rental, operators and getting reductions because they're showing them the facts. Look, you want me, and then I want a 20% rent reduction. And I encourage everyone who's renting to do that right now.
So I want to go to where we are now. The good news, again, like I have no good news for people with general inflation and with health insurance and things like that, it's going to crack. It can't without changing laws and changing the way government manipulates us. With housing, despite all the government manipulation, as you've noted, what are the signs that this is finally going down? So basically, I don't have the chart in front of me. I wish I did. But if you look at pricing, you saw really 2022 was this just biblical level where it went out of control. But then it hasn't gone up since then. It's gone down a little bit off the plateau. It's sort of leveled out because there's this stalemate where people need to sell. So now we have a record, 550,000 more sellers than buyers, according to Redfin. So that right away belies this notion that there is a supply problem, but it's this interest rate trap. So why do you believe, and what are the signs that over the next year or so, that stalemate is finally going to be resolved in the favor of the buyer unless the government does some of this stuff?
Yeah, so we are definitely seeing a deceleration in those price declines, right? And we just got existing home sales. That median sales price was only up 0.4% year over year. This is down from last month where it was up 0.84% year over year. And every single series out there, we are seeing a deceleration. And that is going to continue, especially as we get more motivated in distressed transactions. And if you look at the new homes, Daniel, since that 2022 peak, they are down significantly, double digits. And even for the data that we have, which we just got September and October yesterday, down 9% year over year right now. And so, you are seeing everywhere. And Zillow recently came out, as you know, and said, and 53% of the homes listed on their platform, they've seen on average over a 9% reduction in prices. And so it's happening if we get transactions out there, and we're going to get transactions because when they put those guardrails, this is the one thing they did, Daniel. And, I just keep wondering, did they know? Do they not know? But in April, when they put those guardrails on FHA that went into effect in October, we are now going to see delinquency increase from here. There is no doubt about it. Because people can't apply, they are no longer eligible for these crazy workouts. And so by Q2 of 26, you're going to have a material foreclosure population that's also going to be dragging down those prices. And so all of these headwinds, if the government just stayed out, we would see this market naturally correct.
And that's my concern, that right now all the rage is, oh, we got to bring down prices, which we all support. But yeah, what happens when you have these delinquencies? Oh, we need to save them. See, that's the thing. People need to understand there's ancillary benefits to everything. There's ancillary benefits to having a K-shaped economy. People have very inflated 401ks, and the president was extolling that yesterday and saying he wants to keep that. But you can't have it all. You can't have it all here. And my concern is that they're not going to do what needs to be done. But there are some things we can do that will decelerate even more. Am I getting this correctly? I'm looking at the numbers are something like the government controls in some way between the Federal Reserve and Freddie, Fannie, Ginnie, something like 10 out of the 14 trillion mortgage market.
Well, so yeah, in terms of the MBS ownership, so let's look at who's actually holding these mortgages, the actual mortgages, not even the mortgage-backed securities. 85% of them are held by a government agency or a government-sponsored enterprise, Fannie and Freddie. And this is something nobody knows, Daniel. You know, on social media, people are like, well, the banks. It's like, no, friends. The banks totally stepped back from the mortgage market after the GFC because of those Basel III requirements where these mortgage assets were risk weighted much higher. And so who stepped in? Private credit, non-banks, and the government. Because what they do, these non-banks, is they originate the loans, but then they immediately turn around and sell them to one of these entities, Fannie, Freddie, Ginnie Mae, and then those get securitized and sold into the market. But they hold 85%. This is massive. So anybody that thinks that we have a private market in mortgage is not paying attention. Your mortgage is held by the government if you get one of these loans.
Yeah. So essentially, it's not a corporate ownership problem. That's a symptom. It's a government ownership problem. So isn't it true that while there is no official law that Congress passed that says thou shall have a 30-year fixed mortgage, but isn't it true that if the FHA and Freddie, Fannie, and Ginnie got out of the 30-year mortgage business, and it sounds great, oh, well, how else am I going to afford it? But perhaps it's only that high because of it. What if we had 5-7-year mortgages? Describe to me what would happen with the prices.
Immediately they would go down. And so the 30-year was something that came up after the Depression. And we are one of the only countries that does this because of the securitization game. So immediately, Daniel, prices would come down, and they wouldn't even have to do that. All they would have to do is lower loan limits. These loan limits of what you're eligible to buy and then be eligible for a Fannie Freddie FHA loan I think if people understood this, they would be incensed because, in some areas it's over $1 million. Why is the government assisting with $1 million mortgages? I mean, it makes no sense. And so I forget the exact number, but I think it's now for just a regular conforming loan at like $800,000. And so if they lowered those today, we would see home prices decline.
Wow. This is the sort of thinking that we need. Less debt. You don't say, oh, let's put mortgage rates at, Melody, I would love a 1% mortgage and a 100-year mortgage. But then housing will be $2 million. I mean, I don't understand what is so hard to understand. This is what the conversation I'd love to have with the president. We're pretty much out of time. I think we covered a lot. I just want to go over the sum total of what I see from this bill that I'm very concerned about because it has Republican, Democrat, and White House support this S 2651, 40 provisions, expanding Section 8, expanding loan subsidies, affordable housing grants, and then dictating more, encouraging, incentivizing localities to build more. So Section 202 creates a new federal grant program to fund local housing projects in designated zones. Section 209 establishes a $200 million yearly fund at HUD to award innovating housing reforms to reshape zoning in favor of dense subsidized units. And then it expands the community development block grant program, expands this home investment partnership program, encouraging activist groups and corporate developers to, again, build more. What, in totality, if this passes, what would be the effect of that?
We would encourage fraud. I mean, because that's what's happening right now with all of these programs, Daniel. You have these already exist. That's the thing. Like in Rochester, Buy the Block, which is very similar to some of the programs there. And, these investors buy them, put lipstick on a pig. So, net. And again, I believe they're going to have less of an effect on the housing market than folks think. But it opens up the potential for fraud. And it also is, again, essentially meant to shore up home prices. And that's because all things being equal, that's what it would do. But we have subsidized the housing market to death, which you can see by the sales of the last 3 years, which, Daniel, many of those programs existed already in these cities through the American Rescue Plan money, and they've just run out of it. And so you're just basically, the federal would be backstopping it. But so even with those types of subsidies today, we've seen such abysmal sales, worse sales since 1995. And if we've increased population by over 20% since then. So this is, I think that they're going to try, but they're not going to work, but it's still really bad policy.
And as far as the fraud is concerned, I mean, HUD spends over $15 billion on this project-based rental assistance stuff where they pay local housing authorities and private equity and nonprofits to go and funnel and build this stuff. We talked about this fraud yesterday, and they just put out a new report that it includes $4.3 billion in questionable payments to nearly 113,000 groups. I don't understand why we would encourage so much more grift, fraud, gerrymandering of localities. I mean, this was straight up Obama's HUD, and it's just a bizarre bill that Republicans would support. It's so simple. Just let it go down. Yes, there is an advantage, Melody. If you cut off your head, you don't have a headache. So if we have endless price inflation, yeah, the stock market does well, and people have equity in their homes, and they have it in their 401ks. But is this the economy that we want? I thought we all wanted to move away from this. So I really appreciate you, backstopping this with your expertise and your facts. Where could people find out more from your work? Because you write a lot. You have a lot of good writings.
Well, thank you for saying that. M3 Melody Substack. You can also find me on X Twitter at M3_Melody. And infrequently, I post on my YouTube channel, M3 Melody YouTube.
Yeah, absolute terrific follow. Very high quality M3 Melody Substack. Melody, thanks so much, and definitely keep monitoring this very naughty but in some ways simple issue for us.
Thank you so much.
Take care. And folks, thank you for listening. Make sure to subscribe at Horowitz Show on YouTube, our Substack, Daniel Horowitz, Liberating Truths. When you're not tied down to pimping for any one man, any one party, just the truth. Here's what causes the problems. Here's the solution. We're going to keep doing this. We're going to focus on other issues, but housing was certainly important. Until tomorrow, Micah 6:8. God bless y'all, and thank you for listening.